Yes, pleasure.
Perhaps we can start with the general retail sales data and your thoughts at the top line.
Yes, well, it always sounds terrible when you say we slowed from 6.7 to 4.3, but actually 4.3 real growth is a very healthy retail sales growth. I think we're lucky to be above the 3 level, actually. And, you know, if you look at that at a nominal level, which is where it comes out for the retailers, because the real level is not important for retailers, 8.9% growth is great top-line growth. Generally, your costs are growing at around 7%. If you can still grow your top line at 8.9%, you're making money. So I don't think these numbers are at all disappointing. And in fact, if you look at the various categories where the growth came in, you can see that our listed retailers are doing quite well out of it. The strongest category is the textile and clothing category with 11.8% nominal growth, 8.8% real growth, or what one could consider volume. And, you know, that's where Mr. Price's kind of numbers are coming from.
Jeanine, just a question from my side. Are we getting down to a more normalized level of growth now? And what could possibly be sort of stimulating it? Is perhaps the real economy somewhat more robust, and if we take into account informal employment, for instance, then possibly the official stats are actually telling us?
Yes, I do think we are going towards a more normal level. I think we're probably still a little bit above what the real normal level is. 4.3 is still way stronger than the GDP growth. But, I mean, right through this whole recession, we have seen that the consumer has grown stronger than all other sectors of the economy. So even though we tend to think the economy is so weak, the consumer actually hasn't been all that weak. The consumer continues to get wage increases ahead of inflation. Inflation is higher, but it's still not terribly high. So I don't think that there's anything really surprising in these strong numbers.
Jeanine, isn't the health of the consumer also being fueled by the fact that we are at record low interest rates in South Africa, and that situation could very quickly reverse once we see the central bank embarking on hiking policies?
Absolutely, absolutely. But that is also mostly affects the upper end consumer, but it certainly feeds right through to the economy. The only thing is that in this current environment, it's really difficult to see a scenario where interest rates are going to be hiked aggressively, because the world isn't hiking interest rates. So yes, if our rand weakens, they might be pushed up a bit, but it would be very difficult for South Africa's Reserve Bank to push our interest rates up too much, because it would mean that too much money would flood into the country. So I think it's a balancing act for them to stimulate the economy, don't let it overblow, but also don't push interest rates up too high.
Jeanine, what came out of the SPAR results today was the transfer payments, sort of welfare grants, in parts of their group are proving to be quite a meaningful chunk of their business. They quoted a figure of about 350 million rand per month in KZN on its own. That could be an interesting dynamic fueling things.
Yes, well, I think it has been, and I think maybe we've underestimated how big a portion of the lower income spend is actually just straight from transfer payments. And that the thing with that spend is it's very unlikely to taper off. The government has got no intention of bringing down transfer payments. In fact, their budget accounts for a further 8% for the next 3 years, 8% increases in transfer payments. So at least in the hands of the lower-end consumer, I think that income is relatively stable. The upper-end consumer has the volatility of interest rates, as we discussed earlier.
And then, Jeanine, just a final question from my side. Do you think that the party, when it comes to retail stocks, is set to continue?
Well, that's difficult to say. The internationals can quite easily run when the rand cracks, like it just did today. And of course, the majority of those shareholders are internationals. But I think as a whole, when you look at the world as a whole and what the South African consumer has got for it, I think that there's probably enough supporting those shares, enough in terms of future income and future growth, that they probably won't collapse terribly at the moment.